Okay, looks like the internet's working. Hopefully we're live. Sorry about the technical difficulties. We're working through this. It looks like we're having some issues with our internet, but looks like it's live now. So this is Tax Terrors Ending Your IRS Nightmare. If you get that IRS notice, it's obviously a scary thing. We're going to get you some answers today. We're gonna go through the different types of IRS debt, different ways to resolve it. Hopefully, we're gonna have a special guest on as well. Okay, are we? What is this room here? Okay. There we go. Thank you, Andrea. Can you hear me okay? There's nothing to send. All right, so we're back. Let's just get into it. Sorry about the technical difficulties. We hope to have Michael Sullivan on as well. You know, if worst case scenario, maybe I'll just give him a call and put him on speakerphone and he can talk through it. So what we're doing right now is we're going to go through the IRS nightmare. If you get that IRS notice that you owe money, what are you going to do? Is he on?
He's a viewer, so we just send him.
Okay, come on over and set it up.
I'm waiting for the link, guys. I don't have
the link. Okay. Sorry about the technical difficulties, guys. Yeah.
We're going to try it another way.
We're
going to end that video.
No, we're just gonna move forward. We'll just move forward, and I'm just gonna go through everything. Maybe we can put Michael on. We have him on speakerphone anyway. Michael, can you hear me?
Yeah, I can. I'm looking at you right now. I don't see the link that
Okay, yeah. So if you can hear me, can you hear yourself through the video as well? Michael.
I can hear you, Chad.
Okay.
We can do it from your phone. We can bring him on.
Yes. Sorry about this, Michael. I don't know what's going on with Facebook today. So what I'm going to do is I'm going to give you a call, and I'm going to have you on speakerphone, so that we'll do the interview that way. All right?
I see you right now, Chad. I see you both on my I see artist and you on that link. I'm just trying to.
Yeah, but I'm going to put you on speakerphone now, so I can have you on. You're not going to be on by video, but you'll be on by phone. All right? So I'm calling you from the office.
Okay.
All right.
I'm trying to.
Hey, Michael.
Okay. Can you hear me now?
Yeah, you need to speak up a little bit if you could.
Hello.
Yeah, I can hear you.
Okay, I see you actually. I don't see how you doing.
I'm good. Thanks for joining. We'll just do it by voice. So, everybody, we're gonna jump into this. We're about 5 minutes late starting. My apologies. But what we're gonna do is we're gonna talk about tax terrors ending your IRS nightmare, and we're gonna answer any questions that you might have. So, with me, as you might have heard, I have Michael Sullivan. He's a former IRS agent and teaching instructor with the IRS, Fox News business contributor, and my personal Uber driver and friend. Michael, say hello to everybody.
Hey guys, thank you so much, dude, for having me on. I'm sorry for the technical problems. I'm still looking for the link. I'll find it in about an hour, so don't worry. Don't worry. And listen, this stuff like always happens, so we just got to get used to technology, so it's all good. I apologize for not. I'm sure the link is staring at me right in front of me, so we can keep going and ask anything you want, my friend.
It's all good. We're going to work through it. Your expertise, I understand, is for IRS and state tax debt resolution, offers and compromise, non-filer program, IRS audit, and pretty much anything except for criminal matters. Is that accurate?
Yeah, luckily for us, we don't have any state tax problems in Florida. We do Department of Revenue and audits like that, but most of the work really is done with Internal Revenue Service. So yeah.
Perfect. And we're just going to jump into it since we're running a little behind. So I obviously get many phone calls from people that are dealing with IRS debt, and I think the number one reason people fall behind on the IRS debt that I see is because they take early withdrawals from their 401k or IRA, or they have some other taxable event that they didn't expect for it to be taxed. What are the major reasons that people are calling you right now, Michael?
Well, I think we got to look really at a scenario right now in the firestorm that we're walking into. I think a lot of people right now are going to be dormant for tax purposes because IRS has put a stay on everyone's payments and everything. And actually, last week, I think it was on Friday, they started sending their notices out. So IRS put everyone on hiatus with COVID-19, and I think probably by next year, starting in February or March, there are going to be a firestorm of people coming on, having all sorts of problems. I see them in the 941 spectrum, the corporate tax, 1120s. I think we're going to see a lot of 941s, Chad, in businesses. And, the ultimate decision people make, and why you and I talk, and I'd love to have this conversation so people know, if you have an IRS debt, do you go ahead and have it resolved through a specialist, or do you talk to Chad doing a Chapter 7 or a 13? So at least for me, Chad, if you don't mind, I'd like to ask you this question. What are the qualifications if someone has a 1040 debt? How do you make a decision to file a Chapter 7 for that person or to file a Chapter 13? Is that a fair question? Because I'm thinking that, do I go to tax or I see Chad, right? Is that kind of how it works?
For sure. And the first analysis that I do when people come in is I want to see how old the debt is. If it's older than 3 years old, it's been assessed outside of 240 days, and they filed their last 2 years tax returns, and they haven't been evading the IRS, and that's a loose definition to what that is. Generally speaking, it's the IRS tax debt will be dischargeable if it's that 1040, which is your personal income tax. And I know that you like throwing off those code sections, but our audience might not be as familiar. So that 1040 is basically that personal income tax. It's for the people that maybe they were 1099 one year, they didn't save enough money to pay the taxes. Enough tax didn't come out of your W-2 paycheck, or you had some other debt forgiveness or withdraw from a 401k and a penalty on that. So that would be my initial analysis. The Chapter 13 is more for people that want to work out a payment plan. Maybe part of the debt is dischargeable under that 3 to 240 rule. The Chapter 13 will allow you to discharge that as a general unsecured debt, and then the priority debt would actually be paid through the Chapter 13. So anything you want to add on to that, Michael?
Yeah, I've got a couple questions because these are the questions I get. So first of all, what does a person, Chad, give up when they file a Chapter 7? So let's pretend a person has a house. They have $40,000 equity in the house. They have a car. They have golf clubs. They have furniture. So if I want to file Chapter 7, it sounds very enticing to me. But what happens with the asset base I have in a Chapter 7? Is that a fair question?
Yeah, so in a Chapter 7, you have certain exemptions. Now, the exemption that most people are familiar with is your homestead exemption. So generally speaking, it's an unlimited homestead exemption as long as you have owned the property for a certain period of time, 1,215 days. And if it's under a half acre in an incorporated area or 160 acres in an unincorporated area. Now, what I understand is these exemptions don't necessarily apply to IRS tax liens. Is that right?
Yeah, what's really amazing is if you have a federal tax lien filed against your home, it's not a debt that's going to be included in the bankruptcy because it's an exempt asset. So it's really unusual. It's a real kind of quirk in the law that federal tax lien is going to file that piece of property after they get out of the bankruptcy. It's like there was no bankruptcy filed. Now the rest of the debt is discharged, but that federal tax lien is still out there. And I've heard of some attorneys file an adversary proceeding to go ahead and get it discharged. But yeah, it does file the debt. So let's just say, what are the personal exclusions, Chad? Let's say, does the trustee get into your furniture? Does he get it? These are the questions people ask me. Does he take my TV? How much can I keep if I want to discharge the debt? And can I discharge other debt with the taxes?
Yeah, so generally speaking, the most unsecured debt is dischargeable. You have a $1,000 vehicle exemption, $1,000 personal property exemption, a $4,000 wild card exemption. The overwhelming majority of cases are what are called no asset cases, meaning that all the assets are exempt and there's no distribution to creditors. If there are assets, then you can look at making a deal with the trustee where you pay a certain amount of money to the unsecured creditors, or you look at that Chapter 13. So as long as the IRS debt is older, that's discharged just like any other unsecured. Priority debt sticks with you, and then obviously the tax lien, as you said, goes away. What I get a lot of questions are, why does the IRS go from a priority debt to a tax lien or to a judgment? How do they make that determination?
Well, IRS, if you owe over $10,000, files federal tax lien. There's a threshold that IRS changes from different years and different seasons. It used to be 5,000 and now it's 10,000. So, and then an IRS algorithm kicks up. Sometimes, some years they may move it up, but 10,000 right now is the threshold. The IRS has to protect the government's interest, and they file that federal tax lien. What I also understand, Chad, maybe you can give that some credence. Does that federal tax lien, do you find those on credit reports, or 2 years ago did the Fair Credit Report Act change IRS from being able to report those on credit statements? Do you recall what happened and what year that took place?
I forget the year, but they are not on credit reports that we're seeing.
Right. So that Fair Credit Act took your federal tax lien. So let me just ask you two other questions. Somebody walks into you and they haven't filed tax returns, but they have to file Chapter 7. What happens in situations like that? I get that all the time.
Yep. So that's when we send them to an accountant to get at least 3 years worth of tax returns filed, because under the bankruptcy code, you have to have 3 years worth of taxes if you're required to file. And an accountant will tell you if you met the threshold of income to file or not.
Okay, so do those taxes get discharged in the bankruptcy, or do they just have to be filed? And what happens if there's debt?
So yeah, if you just file the taxes and then file bankruptcy the next day, that would be non-dischargeable debt. So if in a Chapter 7, you would have to go to an expert like yourself to do an offer and compromise or a payment plan. Or in a Chapter 13, the IRS debt would actually be paid through that 36 to 60 month plan.
So what happens, say I have a business, I have a restaurant, I haven't been paying my payroll taxes, and they come into me and IRS is breathing down their back. They don't want to settle the debt, and I set them to you for 941 business taxes. Could you tell me a little about that and how that works?
Certainly. And before we get into that, I want you to explain what the 941, and because from what I understand, the IRS looks at that as kind of stealing their money, right?
Yeah, that's it. When I was a former agent, when I knocked the doors down, I said, "You're stealing the government money." That was like one of the tricks you teach all the new revenue officers in school, and you are. And let me tell you what the 940, that's a great question. Mm-hmm. Sometimes I use, or Chad use terminology you're not really sure of. A 941 payroll tax is you file those quarterly and you report your withholding and Social Security on. At the end of the year, your employer cuts your W-2 to you, and then at that particular time, you have your withholding and Social Security and you get a refund. many employers, and we're going to find a lot of this happening.
Yep.
They do not have the money. They pay their electric bills. They have to pay their bills just to keep their doors open, and they don't make those payments reported on the 941, the withholding and Social Security. And I think next year we're going to see 10 times the amount of taxes. So IRS says, I want the 941s. So it's not unusual that an average business has about $5,000 worth of quarterly debt, and IRS says, pay it or I'm going to lock you up.
Yep.
So in those situations, I may not be able to help these people whatsoever. I'm going to call Chad. This is Chad. Can you take this client? So what happens from there?
Yeah, so what we do at that point, obviously, if you weren't able to negotiate and work it out, we're not even going to go down that path because we know that you've exhausted every option. So then we go into what's called a Chapter 11 reorganization. Now, the Chapter 11 is very effective at working out payment plans with the IRS for businesses as well. But the key is you have to stay current moving forward because, as you said, basically the business owner is taking money out of the employee's check, and using that for business expenses instead of remitting it to the IRS. So the IRS is very harsh when it comes to that, especially if you're doing it fraudulently, meaning you're taking that money and you're going out and buying a vacation home instead of putting it back into the business. And I understand that's kind of the gray area, or that's the line that the IRS looks at if it's really criminal or not. If you're putting it back and you're paying at your FPL bill to keep the business in place, that's not as bad as buying your third or fourth home with the IRS's money. Is that correct?
Yeah, that's pretty true. That's exactly true. I want to just give everyone an overall on how IRS looks at debt, the 30,000-foot view. And, bankruptcy kind of does the same. You and I are kind of in the same area. Chad is a servant to the DOJ, and I'm a servant to the Department of Treasury in a way. So if you owe IRS debt, IRS does this. And I believe Chad does the same thing. You take the financial statement or you do an analysis of a person's inventory. We do that on an IRS financial statement. So what IRS does, they have 3 programs based on that financial statement, and these are the categories you will fall in with Internal Revenue Service. You will either fall in a currently non-collectible, I'll explain all those, a part pay agreement, or you can settle your debt for pennies on a dollar. Your current financial statement determines how IRS is going to work your case. Now, about 50% of all people that owe IRS back debt gets put in what's called a currently non-collectible. IRS looks at the case. They says they cannot go ahead and pay the money. And I want to divert something for a second because I'm going to ask Chad to explain this. IRS and the courts have a national standard. So when they look at your financial statement, you make $6,000 a month, IRS is going to look closely on what they allow you to live on. You can't say, well, I have $15,000, I spent it all, and I can't pay you anything. So both the courts and IRS has what's called the national standards test. Can you explain that a little, Chad, because it applies for both of us?
For sure. So in our world, we call that the statement of current monthly income, or the means testing. And that also goes into whether you qualify for Chapter 7, Chapter 13. They set a median income for state by state. The median income for a single person in Florida is about $52,000. Family size of 2, $62,000. It goes up from there. So they give you certain expenses. For example, if your car expense is $1,200, they're going to give you an expense allowance of about $600. You don't get to take that whole $1,200 when calculating it. So anything else you want to add to that?
So IRS, for instance, looks at that, and they're going to look at your income, and they're going to look at your expenses, and this is how this works. If you make $5,000 a month, and IRS deems that you make your expenses are necessary expenses are $4,000, then you pay IRS $1,000. So it's all by that chart. So 6.5 million people enter payment agreements with Internal Revenue Service a year. They determine the average monthly payment. You can make a 72-month, a 60-month, 48 months. And then the third group, and the reason really that we're in business is we can settle your tax debt for pennies on a dollar if you qualify. Now, Chad can tell you there's a lot of false advertising, and it's in every area, and there's more abuse in the offer and compromise program, whereas you can settle your debt, there's very tight qualifications. So for us, we get a financial statement, we walk you through the qualifications, and then we tell you if you can settle your debt. It's very important to understand this. The cardinal rule for tax settlement is this: IRS will not settle your case unless they have the value of all your disposable assets. So if you were to look at all your liquidity and it's $40,000 a month, that's your house, you may have a little pension, equity in a car, money in a bank, and that's $40,000. IRS will not settle under $40,000. The phone rings all day at my office, all day, for people who want to settle their debt and they have enough equity in their home to pay the tax. So last year, IRS settled 32,000 cases. Wow. For an average settlement of $16,000.
Wow. And when you deal with the IRS, from my standpoint, I always work with my team. You got to go in organized, and you got to understand everything at the beginning, because it seems like the IRS right now is understaffed for the amount of claims that's coming in, at least from our standpoint. Would you agree with that?
Oh, yeah, absolutely. And I think the advantage you have to coming to like Chad's firm or our firm, I'm not trying to put an extra plug or anyone's firm, is a lot of times when you walk in the door to us, that's not the magic moment to go ahead and file a bankruptcy or file an offer. That a case must have the values or the merits to get the best situation. And sometimes after you do the initial analysis, we may say you're going to have to do this, or this, or you're going to give up the entire farm trying to settle the debt or file a bankruptcy. So I think, let me ask you this, Chad, from a percentage basis, how many people come in your office that you file right away, or how many do you file 60 or 90 days later, trying to get them in a situation that they're better off before the courts? Is there like an average? Are you wait 60 days or 6 months sometimes? How does that work with you?
Yeah, so it's probably about, I'd say about 40 to 50% of the clients that come in are ready to file right away. The other 50 to 60%, they may have transfers, they may have other things that they need to wait to get outside of a certain period before you file them. What I always tell our clients that we do differently, and I know you do differently, we don't just file things and hope that it works. We plan for it to work, right?
Yeah,
it's
exactly.
Like
No, really.
I've seen the offer and compromise form. It's not a difficult form to fill out, but it's a difficult form to actually get the IRS to accept it and for things to work out the way you want it to, right?
Yeah, I think it's important to understand it's a lot easier for IRS to reject an offer and compromise than to settle it, because the average offer takes an IRS agent about 10 to 30 hours to work on to accept it. And to get it accepted, it goes to your manager. You're asking the federal government to forgive taxes, and it's got to go up the line. Depending on the dollar amount, it has to be signed off sometimes by a U.S. attorney, depending on the dollar amount. And like bankruptcies are public records, offers and compromise are public record too. Mm-hmm. After an offer and compromise is accepted, there are 6 service centers in the United States, or IRS offices, where you can view the IRS offer and compromise. So I think the key to whether you're going to file a Chapter 7, a Chapter 13, or this is to make sure, Chad, and I see this all the time, and it's the worst thing is for someone to come in the office unprepared and they do not give you the whole story, and you start to set up a plan, correct? Then all of a sudden you find out this isn't what you told me when you first came in here, because you didn't want to feel bad. You didn't want to make me feel bad. You didn't tell me everything. Do you run across that?
Well, the infamous line I always hear is, "I don't know if this matters, but," and it always matters, right? It always matters. It's like, my name is on this property that's worth $1 million. It's owned free and clear, but it's not really my property.
Yeah,
Yeah.
yeah. Or I know a friend who's kind of, and the thing is, you have to understand that the government agencies are going to do a lot of due diligence. They're just correct, Chad. They're just not going to wipe the slate. So, Chad, let me ask you, when you go ahead and file a Chapter 7, who approves it, who looks at it, and what sort of due diligence is done in the Chapter 7 that people are not really aware of what's going on behind the scenes?
Yeah, so in our system, instead of having an IRS agent that's looking at everything, we have the Department of Justice has a panel of Chapter 7 trustees. So these are individuals, mostly attorneys, accountants, and the like, that they're going to do their due diligence on the back end. They pull LexisNexis reports, which we do as well. Which basically
what does that mean, Chad? What does that mean? What's a LexisNexis report?
Basically, it's a full background check, and it's amazing the information that they compile about people, about friends, family, transfers of property, assets. It's really a history of everything that you've owned, everywhere you've worked. I mean, we can find out so much information by doing that. Obviously, we pull a credit report as well to see what's on your credit. And you do a full analysis, and then not only we do it, then the Chapter 7 trustee does as well. And they're looking for transfers of assets, missing assets, bank accounts, all that type of information, which I'm sure that's similar information that the IRS looks at, right?
Yeah, and for IRS can go further. Matter of fact, we had just met with Chad's team over there of attorneys, and what IRS will do is very sneaky. I did this a couple times myself. Is the IRS can go ahead and actually subpoena. It's very easily to get. They send a piece of paper over, and they'll ask for the financial statements you turned into your creditor to borrow money. And I was telling Chad, it's amazing when you want money, what the financial statement looks like, and then when you owe someone, the one you want to give them. Yep. Sometimes, have you found sometimes a disparity in that sometimes, Chad?
Yeah, there's always a difference between when you're trying to put your best foot forward versus your worst foot forward, right?
Yeah, and the other thing IRS does that people aren't aware of, when I was an agent, I drove by what I called was a really nice neighborhood and a nice home at that time, and I looked at that financial statement, and the financial statement didn't look worthy of that home. It just didn't. So when the person gave me their financial statement, I found out, well, I asked them, hey, by the way, just a very casual comment, hey, this is nice. By the way, who's your homeowner or who's your policy with? I went ahead and I summons the homeowner's policy. It was really amazing the addendums that person had on there and the caveats to insure jewelry, furniture, and a couple pieces of art. So yep. IRS, Chad, let me ask you, what happens if somebody is found lying on your IRS? Of course, can do something about that. How about when people lie in situations? What happens to them in a Chapter 7 or anything?
So in a Chapter 7, everything that you sign and file with the court is under penalty of perjury. So with the penalty of perjury, it can go criminal if it's shown that it was willful, and you can also lose your discharge, which means all of the debts that you filed are non-dischargeable for life. So they have the rest of your life to try to collect from you, and that's for all the debts. So it could be American Express, it could be Bank of America, any unsecured debts, and the IRS as well would be non-dischargeable in that scenario. We've been talking about some of the horror stories out there, so I want each of us to give a success story. I'll start because I know that you've had hundreds, if not thousands. Me as well. I still remember one of my favorite clients. He very successful in what he did. He came from a small household, grew up with not much money. He always would say that his mom's financial advice was YOLO. You only live once. You're making money, enjoy it. And he hired a management company to handle his finances. Unfortunately, he was being paid $10.99, and his management company wasn't really managing that. He was making a significant amount of money. the IRS came asking for $350,000, and we were able to, through bankruptcy and negotiating, to get that down to about $40,000 that he's able to pay off and discharge a lot of that debt. So if you get these notices, the number one advice that I give people is don't ignore them. And I think you would agree with that. A bad problem only becomes worse if you ignore it, especially with the IRS. So, so tell us a story about a successful client that you've had.
Well, I don't want to give myself a pat on the back, but I am. A person doesn't come into me and I'm going to work the case that they're not going to have success. And I mean that, Chad, in all honesty.
And I've seen that.
A lot of times, and I say that humbly, but I have to be truthful. When a person comes in, they're going to hear the truth, whether they like it or not. And sometimes the best thing a representative can do is just to manage the case and not necessarily say, I did this and I did this. When people come into me, and I'm sure to you, they have a tremendous amount of angst and anxiety and worry that comes into them. So I think just coming down and settling that client down and give them a very definitive plan and tell them, hey, this is the way it's going to go. Actually, honesty is the most success you're going to have in dealing with some people. So everyone who comes in, I'm going to add something. If I'm collecting a fee on any client whatsoever, they will have a success story. If not, I will not take the case. I have saved millions and millions of dollars for clients over the years to IRS on settlements, but then I only take those clients that I know I'm going to have success. So I hope, Chad, in all truth, that every person who comes in that door and writes a check can tell you a success story for me, really, honestly.
That's great. Michael, I really appreciate you taking the time. I want you to give your information if anybody watching this needs your assistance. How can they get in touch with you?
Yeah, you can just call me on my cell. By the way, is this the promotion part?
Yeah,
that's what after the 30 minutes I get is to give my contact number. Right?
That's right. You got to give free information to get this promotion part.
And by the way, you can go to anybody. A lot of people, Chad, like you, they want to go to their own attorney in their own professional, and that's fine. I really have my expertise in IRS and state work, and my cell number is 954-328-3501. That's 954-328-3501. That's all you call. I'm not going to give you my email address, or you can get a hold of Chad's office. Yeah, Chad, I just want to tell you, there's a lot of bankruptcy attorneys that I know. I've been doing this work in South Florida since 1973. And I just want to tell you on behalf of myself and being at your firm, the people that I send there, and this isn't kind of a lip service thing. This is a real truth statement. You guys and your team have a very quality program over there. I have never heard one person say anything, not one person ever say anything against your firm. They've had nothing but compliments, and I think what's really big is they always say you communicate back to your clients really well. So I tip my hat for you, and I thank you for having me on. If you have any questions, by the way, you can call that number, and I will get you answers immediately. So thank you very much, Chad. God bless you guys.
God bless you, Michael. Thanks again for making time today, and we'll talk real soon, all right?
I would have had to charge you more if you seen my face on Facebook. That's why I only accepted the phone. Yeah, goodbye, my friend.
All right, we'll talk to you soon. Thanks, Michael. So thank you to Michael again. Thank you for everybody that watched. I hope this was helpful information. If there's anything that I can do to assist you, give me a call at the office, 954-637-0000. You can go to vanhornlawgroup.com, comment in the Facebook box as well. You can email me directly. If I can't help you, I'll get you to somebody like Michael who can. Also, there's 2 books out there, The Debt Life and Bankruptcy in Florida. If you want a copy of that, feel free to go to our website and you can grab a copy of that as well. So thank you again, everybody, and have a fantastic day.